In reaction to the company's fourth quarter and full year earnings reports, as well as its 2022 outlook, Lucid Group's stock price fell 13.8% the day following the report. There was a lot for investors to be upset about, including the company's downsized 2022 production target of 12,000 to 14,000 automobiles, which was lower than initial projections of 20,000 units. As a whole, the report and guidance were disappointing. However, it would be a mistake to disregard certain important short- and long-term improvements that have surfaced. And that's what we'll be discussing in today's video. So stay tuned. Lucid investors have every reason to be dissatisfied with the company's revised 2022 projection, as well as its intentions to delay the highly anticipated Gravity SUV to the first half of 2024. But when it comes to investments, instead of focusing on what the firm is now, Lucid's investment thesis should be based on what it may be in the next 5 to 10 years. So, here are the 5 green flags from the recent earnings release and how they fit into the Lucid investing argument. Growth in reservations. Lucid has increased their reservations by quite a number. In comparison to the 17,000 bookings that the startup reported in mid-November or after the third quarter, it has over 25,000 reservations across its range of electric vehicles as of February 28th. That is a 47% increase. For Lucid, these bookings suggest potential income of more than $2.4 billion or $96,000 per car based on the current number of bookings, because Lucid Air bookings are spread over a wide range of price points, from $77,400 for the Air Pure to $139,000 for the Air Grand Touring and $169,000 for the Dream Edition, which suggests there's a good mix of reservations throughout the various trims. More than potential revenue in this case, the increased number reflects that Air sedans have growing demand, and that is a positive signal for the business. Furthermore, Lucid stated that it had gotten more pre-orders for the Grand Touring than it had for the Touring, a sign that buyers want their vehicles sooner rather than later and are prepared to pay more for a premium tier. Affordable Variance on track. The Lucid earnings call may have looked full of delays, but there was one thing that was still on schedule. We know deliveries of the Grand Touring have already started, but what's interesting is that the Touring and Pure models are still on schedule to hit the streets this year, despite the fact that the startup has not yet delivered all of the Dream Edition cars that have been pre-ordered. The company has said that it's more concerned with developing a brand and ensuring quality standards than it is with speeding up deliveries. The Pure's pricing is much more comparable with rival luxury sedans than the Lucid higher price trim levels. Due to the obvious vehicle's greater total market potential, Lucid will have to compete against a more diverse collection of competitors. Peter Rawlinson highlighted his enthusiasm about Pure at the conclusion of the company's earnings call, stating, "Its successful implementation is one of the company's core goals right now, and not to mention the wide range of customers that they'll target with this model." Low supply chain risk. The industry has been struggling with supply chain issues. In the case of Lucid Motors, the majority of its supply chain issues are centered across a small number of its about 250 suppliers. Furthermore, they're not experiencing supply chain issues for anything basic that's been hampering the industry, but rather for completed parts and trim items such as glass, carpets, and other aesthetic components. Since Lucid's supply chain problems are linked to supplies rather than fundamental technology, the firm believes that issues will linger for just several months before easing in the second half. This is a far more optimistic estimate than the ones provided by Tesla and Ford in their respective fourth quarter and full year 2021 earnings reports. Lucid has made significant investments in its electrical and technical teams, both in terms of money and effort. It develops and manufactures the majority of its printed circuit boards in-house, as well as its battery packs and engine. The fact that Lucid has a modest manufacturing volume and is vertically integrated suggests that it will likely escape from the majority of supply chain issues before other manufacturers. No cash issue. Startups need a large amount of liquid assets in order to survive through the first few years of operation, since they are the ones that require the most cash or investment. Lucid has this part of the business covered after issuing more than $2 billion in convertible bonds at the conclusion of last year. The business closed 2021 with $6.26 billion in cash on its balance sheet. It forecasts capital expenditures of around $2 billion in 2022. When operational expenditures are taken into consideration, Lucid should have adequate cash to support its operations in 2022 and for the majority of 2023. The business said that it should have no difficulty acquiring more funds from the financial markets and from governments as and when required. In fact, their timing to acquire funds through its initial public offering and its bond issue was ideal, given the increasing interest rate environment that exists now. Lucid has this year covered for its financial needs, and these funds could be leveraged to expand the business both inside and outside the United States. Saudi Arabia's backing. For a startup, a good investor means quite a lot of value, and PIF of the Saudi Kingdom has been that helping hand throughout its existence. And now, the Californian startup has signed contracts with the Saudi Arabian Ministry of Investment, the Saudi Industrial Development Fund, and the King Abdullah Economic City to establish a manufacturing facility in the country. Opening in 2025, the facility will have the capacity to manufacture 150,000 units per year. Currently, Lucid's Arizona manufacturing factory can produce 34,000 units per year, but the company plans to boost that figure to 90,000 units, and that is why they have already started expanding their U.S. facility. Both U.S. and Saudi factories will combine to make 500,000 sedans, achieving the Rawlinson 500,000 unit goal. All that has been made possible by their major investor, the Public Investment Fund of Saudi Arabia, that holds a 61.7% ownership in Lucid. Through its financial assistance, as well as its commercial potential, Saudi Arabia continues to be a stabilizing influence for the startup. As an investor, it's important that you know what to watch for so you can rely on Lucid's convincing long-term investing strategy while keeping an eye on potential risks and red flags. Lucid is approaching the most critical year of its existence as a publicly traded business. The company's long-term success will be dependent on its ability to meet its short-term production and delivery targets, while also growing its manufacturing capacity and pushing new variants in the market. Wall Street has placed some of their most significant bets on the expansion and long-term viability of the EV sector during the previous few years. It's important to note that the EV market marks a big shift from conventional automotive firms, which attracts the attention of investors looking to get in on the next big thing. However, investors must take precautions since the stock of this business is not for the faint of heart. The demand for electric vehicles will continue to rise, with businesses like Tesla and Lucid Motors seeking to gain more and more market share. J.K. Wang says it took 5 months to produce 400 cars. The next 10 months, they'll produce 800 cars. That's a total of 1,200 cars for 2022. If they can produce more than 1,200 cars, J.K. Wang says, that'll be a surprise. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.